Frank Perspectives. And today I'm delighted to introduce two of my guests, Alexander Picker from Austria. He is a very veteran banker, and he has been in the managing board positions from 1997. His banking experience encompasses continents. He has worked in Austria, CIS. He has been a CEO of Edico Bank, ATF Bank Kazakhstan, UniCredit Serbia, and Komercijalna Banka Skopje Belgrade. He has been a board member of Bank BPH Poland, International Moscow Bank, and many others. And importantly, he has handled banks in distress and overseen many legal and operational mergers. Currently, he is an advisor, consultant, and frequent speaker at many international conferences. And importantly, he is a multilingual executive and can speak 10 languages. So very warm welcome to you, Alexander, today.
Hello.
I also have Bikram Rishi with me, veteran banker with 27 years of experience in various multinational banks, including ANZ, Citibank. He was a head of consumer banking with Standard Chartered and head of consumer bank with HSBC based at Oman. So he has worked in UAE, Oman, Bangladesh, and India across functions, including retail banking, wealth management, corporate leasing, factoring, SME, consumer durable finance, and many others. He's currently the CEO and CEO of United Finance Company based at Muscat. A very, very warm welcome to you, Bikram. And again, thanks so much for joining me today for this episode of Frank Perspective. Across the globe, a very, very unique situation, and a situation that at least I have not seen in my lifetime to this extent, and brings in its own challenges in how banks, countries, governments are going to handle them. So getting on with our discussion for today, Alexander, my first question is to you. What was it like in Europe before this COVID pandemic spread out? What was happening in the banking space over there in terms of banking, banks, fintechs?
Pre-COVID, the most important issue was basically the Anti-Money Laundering Directive number 5, which came into force on January 10th. It changed a lot in the customer due diligence process, which was enhanced then for the cryptos. So basically what was important was the KYC process, the registration of wallets, the beneficial ownership getting more and more important. The PEP lists had to be done. The e-money threshold was even lowered. And they were coming into real estate transactions there too. That was on the one hand side. On the other hand, there was a big discussion of the so-called frenemies, the fintechs and the large banks. And here the discussion turned around the PSD2, and there was the main topic, the access to open banking and how the fintechs could make use of the data of the banks. Basically, not a real focused discussion on one topic.
So variety of things happening, and I see there are a lot of initiatives which are happening in Europe, which had a lot of learning for the globe per se. And I was evaluating PSD2 in particular, and how that could have some learnings even for the Indian market. So, what was the situation in the Middle Eastern markets, Bikram, before this pandemic spread out?
So, Amit, as you know, the Middle East market basically was already under a lot of stress. Oil prices going down, and they had been continuously down for a lot of time. First, because of the US-China issues, then essentially demand going down, Saudi having issues with Iran. So there's a lot of conflict. And especially the UAE gets affected significantly because it's run primarily on oil and gas, as well as trade, as well as logistics, and of course the property market. So all of it was getting affected, and banks were having difficulty in sourcing funds because funds were becoming very, very expensive. In the Middle East as a whole, that was an issue. And then of course, COVID came along and it was a double whammy. So things have become quite difficult. On the accounting side, the banks are sort of still coming to terms with IFRS 9, and they were coming to terms. And of course, with COVID, that's another issue that is cropped up. And then there was the introduction of value-added tax. Some countries had it, some countries are still thinking about it. Of course, COVID will bring up about new realities on these 2 or 3 issues.
So very, very contrasting comparatives, if I have to see what was happening in Middle East, where it had its own challenges coming in, primarily driven by the fall in crude prices, as well as the other factors that you mentioned. And interestingly, on the European side, there was a lot of focus on the new technology, new regulations, and open banking, as Alexander mentioned. So naturally, the question is, how did COVID change this situation?
Basically, old problems were coming up. The industry had been warning quite a lot about IFRS 9 in Europe, and actually in the US, you had at the same time the CECL, the current expected credit losses. So the whole idea basically was, if you take into account that the US was as a tendency to front load losses, which was due also in the crisis of 2008, whereas Europe has a tendency to smoothing out the losses over a longer period
of time. Yeah.
So the trigger for both methods, actually the CECL and the IFRS 9, was now the first moment of a deterioration of the portfolio. The industry said it was a fire accelerant, and such it was. So actually, in the last minute, I would say, the European Banking Authority, the EBA, issued a directive or a regulation on the 25th of March, saying in the last minute before the end of the quarter, which was necessary in order to protect the capital of European banks, to say that, and I cite them here, that there's a certain degree of judgment involved in using the IFRS 9. Mm-hmm. So the iron rule of bookkeeping, saying that it should reflect the reality, was softened up. The forbearance rules were kind of suspended, which means portions the ratios which they had in order to protect the banks were now pro-cyclical. So due to the moratoriums which were proposed by the government, the EBA said, well, of course, you don't have to put them directly into the forbearance rules. Non-Euro regulators went even further. The liquidity coverage ratio, for example, was too relaxed in Poland, for example. So just today, a clarification by the EBA came out for these relaxations, because there are a lot of questions, of course. Questions like the adaptation of the aggregation factor, which was clarified today, of being just 66%. Still, I would say a lot of questions are still open. We had a three-dimensional vision of the economical situation. Now the EBA said, let's close one eye and have a worse orientation, basically, in this risk area.
Bikram, how is the situation post-pandemic? And you mentioned there were already certain changes which were happening, whether it is taxation, whether it is on account of crude. What fundamental changes did COVID bring in for the banks?
So for the banks, the economy is largely led by government spending. Okay, in the Middle East, it is not a consumer spend-led economy. So that was important, that government had money to continue to spend. This, because the oil prices had been coming down, created a requirement for the government to start raising funds. So the banks were involved in raising funds for lots of governments. The Abu Dhabi government had a bond issue of $7 billion, which was oversubscribed by 6 times. And every country in the Middle East is trying to raise funds through the banks. So that's something which banks were really, really busy doing. Some countries find it more difficult, like Bahrain and Oman, because of their sovereign ratings. But others have strong reasons to be able to raise funds. But COVID also brought about a stop in economic activity. A large part of the Middle East has an expatriate population. and that expatriate population is now starting to lose jobs. So the NPA's situation obviously is very worrying for most banks. So on the one side, you have SMEs who are badly affected by the issues that have been stopped from a bank's perspective. Expatriates, so your lending side, which is largely to largely to corporates, but a significant portion is personal lending. By personal lending, I mean auto, credit cards, everything included in that. So that part also will get significantly affected. So it is very worrying because on one side, government's not able to raise money to spend. And on the other side, because of this block, because nobody could go out really, there were very strict blockages in the UAE. People could not start to repay. So that's something which was a huge concern on the funding side as well as on the lending side, both sides.
Very, very true, Bikram. And I think that is true for most of the economies. And you rightly mentioned there is a strain which is going to be on the lending portfolios. And that leads to the next questions. What do you think are going to be the strategies which can be adopted by the banks to manage this increasing stress on the lending portfolios? Whether it is on the corporate side or whether it is on the consumer side, would be their strategy to handle the situation?
So basically, once this happened, the governments of most countries stepped in and then they asked banks to give a deferment or a payment holiday for 6 months or 3 months, and it varied. So there were some who asked for it to be given without interest or profit as for Sharia reasons. So that caused a lot of cash flow issues. So clearly now banks are struggling because they need to raise current accounts and savings accounts. But the problem is 30 to 40% of the book size is funded by government deposits. Government themselves have very, very little money to give to banks. So that's really become a challenge where the sourcing side of funds is a real issue. Then of course there is the lending side, which when you give a deferment, you're sort of kicking the can down the road, but the NPAs will start to mount, and banks have already started to say, okay, this percentage of my book will become an NPAs will probably double. So that's something that one has to start thinking about. And then how do you manage, because there is the provisioning side of things where IFRS 9, still there is a lot of, there is ambiguity. Even from the big four who are auditors, they're also unable to provide clarity on how IFRS 9 will impact provisioning for deferments, which are essentially mandated and something which is out of control of the banks. So there are a lot of issues, which the banks are grappling with at the same time.
So what I understand from what you're saying, Vikram, is that primarily banks are getting mentally prepared with increasing provisionings, increasing stresses in their portfolio, which is possibly will double and maybe more, who knows. Yeah. Alex.
And one more point,
yes,
before you go. One more point is that the source of funding is another big issue for banks, because your repayments from customers have stopped essentially, right, for 6 months. Your repayments stop, source of funding, and then the cost of borrowing goes up significantly. So your profit margin
could come down. So Alex, your response on the portfolio stresses and how banks are handling and what is their attitude right now?
I mean, in Europe, I do see a lot of still wait and see attitude, which is kind of a paralysis. So, which I don't quite understand, but it is quite heavy here. I mean, everyone is looking now at the European Banking Authority, on the government, and it is a big problem because the governments want the banks to perform, to give loans. For example, in Austria, so we had a lot of support loans given. Then first the government was guaranteeing 18%. Now the bank said, okay, but we do have the full credit process, so we cannot give just money even if 80% is held by the state.
So you're saying banks are waiting for EBA or government initiatives and still not made up their mind in terms of their own initiatives that they should be planning.
Exactly, and this is, I think, a problem, because what we know from the last crisis and crises, that only a quick action can bring results. The first mover wins. So industries have to be ring-fenced. For Europe, for example, tourism is very important. Europe is now secluded. The European Union didn't find a common answer. So it's a more nationalistic approach, whereby every state closes its borders and doesn't allow travelers to go there. Germany said, well, stay at home, don't go on holidays. Austria says that, France says that. So this will be a problem for the whole industry. Then other actions has to be done. I mean, customers have to be stress tested. Clusters have to be seen. Maybe new products have to be devised. Digital is on the rise. Digital products should come because people cannot come to the branches anymore. Then there is a huge necessity, basically, to continue the accounting as before, because you have to think, what is after the crisis? How will rating agencies look at that? And after the crisis, they would say, yeah, that's fine. But what would it be if you would have taken all the accounting standards, which were standard before? And I mean, the solution there might be on innovation, as always, and on blockchain, for example, for more on the crypto side. I mean, Bitcoin has been performing so-so. There was the halving now, so there are quite interesting developments there on this side too. But I do think that action is necessary and not waiting and see.
Very important point you make, Alexander. Very, very important point. And I think that's a learning for banks across the globe, which is to look at the scenario while you will be getting these dispensations from the regulators and across. And that's the same situation even in India. And Bikram also mentioned the dispensations being given on the moratorium or on the repayment or the interest waivers. And same thing in Europe, is to look at the scenario after these dispensations go away. Yeah, and try to see how would you handle that worst case scenario. And I think a very important point you made, Alex. And Bikram, coming back to you, and you also referred to a very important point which I want you to elaborate on the CASA, on the current account, savings account, and deposits part of it. Of course, Middle East, there is a lot of government and corporate deposits, which possibly drives the liability book of the bank. But generally speaking, there is a lot of reliance on the granular deposits, both in the checking accounts, savings accounts, and term deposits. Yeah. How do you think banks are going to cope up with that situation? Because as businesses get shut for a long period of time, as cash flows get constrained, this money which was lying with the bank till now also starts getting depleted over a period of time. Why, it's going to take some time for recovery to happen. So you have both sides of the balance sheet. You have a problem. You have assets which are getting stressed and therefore impact the cash flow, and you have liabilities wherein you are seeing a depletion. So how do you think banks can manage? Is there a way there to look at this? Drawing on your experience of handling consumer banking.
Yeah. So basically, it's going to be really tough. One, because your salaries, many companies are cutting down salaries. Some are laying off people. So, that your CASA, at least the SA part of it, gets stressed. Then on the company side, yes, okay, the deferments help. For 6 months, you don't have to pay your installment. So that would help. But as you start up, there will be spending requirements. So it's going to be a challenge. Now, it's something which banks need to plan for. You need to give higher interest rates. Something needs to be done. And those, I know banks are thinking about seriously looking at, given the situation, throwing out all the norms and giving interest rates even for current accounts. So there has to be some amount of compromise done, because the cost of borrowing has gone up significantly. And if you can attract and retain your customers at a time like this, then that will be fantastic. So I see it as a challenge. It's something which will happen, but ultimately it'll smoothen out. I see it as a challenge for next 8 to 9 months, but then it'll smoothen out.
Mm. Alexander, your views on managing the liability side of the book?
The liability side will be an issue. I think it will dry up quite rapidly too. You have in Europe, in some countries, quite high savings rate. So basically, all the savings of Italy cover the debt of Italy too. But of course, it's a redistribution, which nobody really wants. What I wanted to say, they are taking into account the other banking crises we followed. For example, in 2008, there was all of a sudden a dollar crunch. Luckily, the Fed and the US government reacted. So I do see a possibility for such a crunch again, particularly running parallel to the oil prices, which is not a good sign for the macroeconomic too. Generally in banks, we have a time lag. I mean, the macroeconomy goes down. In the banks, you see that 6 months later. So it is to be expected.
There's a lag, yeah.
That the lag will come afterwards, which is basically good because now the banks have the time to prepare. I do see less problems than in the liquidity because there will be TARP-like regulations from the central banks, but still it will be an issue to look at the business model of the bank. Consumer lending, for example.
So you're right. I think may not be so much from a liquidity perspective, but maybe from the long-term viability, long-term sustenance, and how do they look at their own business model per se, right? And you referred earlier saying digital innovation and something new possibly would have to be thought through. And this brings me to the next question, which is, yes, of course, there are challenges, and banks, regulators, governments are trying to cope up to the extent possible. But are there any silver linings? Are there any opportunities that this turmoil is likely to bring for the banks?
I do think particularly the whole crypto world and the payments world will be extremely important. So micropayments, I mean, we have in the shops here, for example, less cash to be done because the shops say we don't want the cash. There might be viral or bacteria on the cash, so just pay contactless. So NFC made a huge boom, and I do think digitalized processes and changes of working might happen too. I mean, you know that there will be changes in the industry. Warren Buffett got rid of his shares in the aircraft carriers. So I think this is a very strong sign that these things will change. So I do see some tech companies. I do see some medical companies coming up. I see the real estate market quite critical, but I think the chances are there, but only for the first movers.
Bikram, your views in terms of the opportunity?
So basically, in the Middle East, there's been a lot of monetary and fiscal stimulus. Say, for example, in the UAE, the fiscal stimulus amounts to 9% of the GDP, which is, given a GDP of 400 billion, it's quite significant. And I think the whole idea is that they really want to look at food security. Agribusiness is less than 1%, so it's 0.9% of their total GDP. They want to have food security. They're definitely focusing on manufacturing, which is about 9% of the GDP contribution. They want to take it up to 25% by 2025. And they're very clear on the areas also. So they want to go into aerospace, maritime, pharma companies, aluminium, so metal related, because they have the energy to, whatever is very energy intensive, they're quite clear they want to do those kind of things. This is also a great time for them to, most economies in the Middle East are very heavily dependent on either tourism, which is like a Bahrain, or oil and gas, which, on one extreme is Saudi, Oman, etc. So they really will focus, now they have to focus on diversification, because oil prices are likely to remain low for a while. So they are focusing, they are being forced now, not because there was easy money coming till now, but that's totally stopped. So I see those as silver linings. And yes, of course, the whole automation, mobile payments, cash is still king in the Middle East, which will definitely change. People are scared of using cash, and mobile payments, I think, will become the norm rather than an exception, just like it is in India. So that's something which I think definitely is an opportunity.
So mobile payments is the big area. But drawing on what you said earlier, Bikram, which is on the sectors, and you said certain sectors are likely to see large investments. Do you see a role of banks to play, or primarily this will be driven by the government investments?
No. All of it will be led by the banks. I think that is the key thing, that the banks will have to shift their focus from funding. See, till now it was oil and gas, largely oil and gas and oil and gas related. So whether it was upstream or downstream, and now it will have to move towards funding agri, funding exports, funding value-added units, free zones, and of course onshore manufacturing, which will allow self-sufficiency for the Middle East, because worldwide there's going to be this trend of trying to be as self-sufficient within the region, at least, if not not within the country. So within the GCC, I see a lot of that happening. So I see banks within the GCC looking within the GCC to say, okay, in this country, I think I can get the best out of this. So for example, there's a huge urea plant in Algeria, which is one of the largest in the world. So, how do you look at all those and start looking at the GCC and the Levant region as one, rather than look beyond that?
So my last question to both of you would be, how much time, in your view, it will take for banks to come back to the normal, or that normal may never come? And I leave it to you for your judgment. What is going to be the new normal for the banks?
Amit, I think you're very right with the new normal. I mean, I have been asked after the 2008 crisis for more than 7 years, when are we going back to normal? And I said, well, forget it. It's a new reality.
It is never coming. It is never coming.
I do think the new reality starts now. I do think that now we have to see what will come out of that. I think the travel industry as we knew it might be heavily changed. And I think there's a lot of additional elements hanging on it. So we better start to prepare right now with the innovation and stop the paralysis.
From your views?
My view is that I think it'll take the Middle East, at least the banks in the Middle East, at least up to 2022 before things start to look normal.
Okay.
I don't see anything approaching normality this year, and of course all of next year. It's not just the COVID situation, and the UAE, for example, has started opening up. So that's something which is a great lesson for other countries like India, which have again extended their lockdown. So there is a cost to doing that. But I think everybody realizes that if you don't start opening up and don't start living with the new normal of COVID, like we've lived with the other, pandemics, we will never get back on our feet. But the problem is not just COVID in the Middle East, it's also the oil prices and the low demand and how the world picks up on demand, right? Yeah. So it's both. And I don't see that happening before the end of 2022 or the second half of 2022.
So this opening up of the lockdown in Middle East brings me to another question. And Alexander, I would want your input on it, because Europe has seen multiple approaches being adopted by different countries, right? So you have Italy handling it in a different way, Germany handling it a different way. So what is it that is happening in terms of the approaches of the various governments there? Is there any conclusively coming result which is coming out, which is saying that this seems to be a better approach?
For the time being, it's too early. I mean, we have Sweden, which with a very high death rate on the one hand, with no lockdown on the other hand. You have Italy, you have Spain with a lockdown and still very high death rates. You have Austria and Germany with a lockdown with very low rates. You have Finland with a lockdown with low rates. So I think the next 2 weeks will show us and will be decisive.
So on that note, Alexander, I think it sums up what you've said. It sums up the challenges all of us face across the globe, that it is new thing. Everybody is trying to do new, trying to identify what could be the best approach to it. None of us know it. And that is the situation for the bank. But I think when both of you also rightly said earlier, that banks have to try something. You cannot just have, as in Alexander's word, you cannot have paralysis. You have to try out things and look at scenarios beyond the dispensation that you've got. So thank you very much, Alexander. Thank you very much, Bikram, for joining me today for this episode of Frank Perspectives. And I look forward to connecting with you very soon again as the situation evolves. So thank you again.
Thank you, Amit. Thanks a lot. Pleasure.